All right, I'm looking at a minute past the hour here. So let's get started. I know that this is busy season for all of us who work on nonprofit policy or who work for the nonprofit sector. Welcome to Independent Sector's monthly policy update. I'm Ben Kershaw. I'm a director of public policy and government relations. I want to start with a few housekeeping notes. For those of you joining us for the first time on an IS webinar, welcome. Independent Sector is a national membership organization that represents a diverse set of nonprofits, foundations, and corporate giving programs working to ensure all people in the United States thrive. As part of our webinar feature, all lines are currently muted. We'll pause for questions, or you can drop them in the Q&A box at any point. This webinar will be recorded and posted on the IS website. It'll be emailed to you next week. Before we start, I want to respectfully acknowledge I'm joining you today from Washington, D.C., the ancestral home of the Piscataway people who are still in the area and working to reclaim their land and traditional practices. I also want to acknowledge many of the buildings and places we inhabit in Washington were built by enslaved people. Wherever you are joining us from today, we're really glad to have you with us. These sorts of policy education events have historically been a benefit for independent sector members, but we've opened them up to everyone during this pandemic to ensure that all of the charitable sector has access to the latest policy information at this critical time. I also want to wish those of you who celebrate happy preparations for the last night of Hanukkah. For those of you who celebrate Christmas, like I do, I hope you can hear me okay through my new Christmas present. And happy birthday to Pope Francis as well. So I'm joined today by Wes Coulomb, our trusted partner and managing director at Washington Counsel Ernst & Young. And also by my government relations partner in crime at IS, Ana Montañez. Thank you both for being with us. So Wes, it always seems like the IS monthly policy update is something that generates action on Capitol Hill. So what is Congress doing, at this latest minute with, negotiations heated, certainly in response to our monthly policy update? What can you tell us about the landscape and the latest on the Hill?
Sure, happy to do it, Ben. And it's a lot of, Groundhog Day. You've seen this movie before type situation where, we've been talking about the COVID relief package for, 7-8 months now since they passed the CARES Act and extended PPP back in the spring and the summer. So this has been going on for a long time. I think they're down to the wire on actually getting close to getting a deal. They've made some progress this last several days as Leader McConnell and Speaker Pelosi and the White House have been engaged in some conversations to see if they can get to a final deal. I think my understanding is, as you know, the CR expires this Friday, tomorrow at midnight. They're trying to reach an agreement on one, the omnibus appropriations package, which has the 12 appropriations bills for the full fiscal year. And then add to that a COVID relief package to that, which up until last several week or so, been pretty far apart between the Democrats in the House and the Senate Republicans on a number and on the policy differences. The bipartisan group in the House and Senate did come together, put together about a $750 billion package, absent state and local government funding and absent the liability provisions that McConnell was pushing for, and see if they could reach an agreement on that kind of basic outline. That is now being drafted by the leadership offices to see if they can finalize a package and put it onto the omnibus package by the end of this week. It's looking pretty clear they're going to have to do another CR. There's been a conversation about how long that would be. Would it be for another day, 2 days, a full week? Unclear, but they're definitely going to have to work in this weekend, and if not in the first part of next week, to finalize a package. Even if they were able to come to agreement today, needs to be drafted, put on the House floor, vote on the Senate, et cetera. So, it looks like they're going to be working through the weekend on a package now. Nothing's final until it's all finalized, but looking like it's going to be pretty much, the core elements of what the bipartisan group had out there, $750 billion package, PPP second tranche of loans. I know the nonprofit sector has not been happy with some of the definitions in there, trying to work on some of the language regarding how that would apply to nonprofit organizations. 300 employees or less, and a decline in revenue of 30% or last quarter of this year. Hopefully that can be more targeted to nonprofits and help them to get advantage of that second tranche of loans. Also, a lot of funding in there for vaccine distribution, healthcare workers, funding there for broadband, childcare, et cetera, and the sector cares about. So, in the hopes they can get an agreement, like I said, it would probably be, filed in the House if they can do it by tonight and voted on pretty much by Friday, then probably the Senate over the weekend or possibly in the first part of next week, depending on how quickly they can process a package. So we're hoping to see some sort of agreement out of them later today, but they've been, going back and forth on the details. I've heard they made some progress on things, and some things are still sticking points they haven't been able to agree to. So, it just takes time for them to put the package together of this size. It's going to be, 1,000. Georgia runoff race 2021 with the races in Senate races in Georgia, races in Senate races in Georgia, races in Senate races in Georgia coming January 5th. And so, obviously people are looking forward to what happens next year once they finish the business for this year as well. So we kind of stop there and answer any questions on where things might be.
Great, thank you, Wes. And so before we check in with our audience about questions, I want to dive in a little bit more into some of the details we've seen from at least the public bipartisan text. So a number of key issues that nonprofits are watching. There is, before we talk about, second draw, there are some changes to the core of the Paycheck Protection Program that we're watching. I think one in particular is encouraging to see, and that has a lot of bipartisan support, is streamlined forgiveness for smaller loans. I know that's a provision that IS has endorsed and a number of our colleague organizations have endorsed. Is there anything else on the core PPP, first draw program that you're seeing, Wes, that you think we should be paying attention to?
Well, I think the key is the loan forgiveness rules make it easier for borrowers to get their loan forgiveness in there. That really, I think, is the key. Now that people have got the first loan and are now in the forgiveness phase, making sure that is as easy as possible to. I mean, the program is, unfortunately, has been riddled with a lot of, uncertainty and unclear rules, and so it's been, a lot of borrowers and lenders having to go back and ask a lot of questions, and so it's kind of unfortunately made the program not as effective as I think it could have been had it been more clearly, articulated how these rules would work. Obviously, the forgiveness piece is the most important, right? And so if you are trying to get a loan forgiven, and you can't get it, you have to then pay it back, and that's a big hit for an organization. So I think these loan forgiveness rules are really the key to going backwards.
Thank you. And then there is also this, new tranche of money for second draw loans, which is the abbreviated term for organizations that receive PPP help earlier in the year and are still in need. The goal, as we've heard stated and is reflected in the legislation from Congress, is to target relief to sort of those organizations that are most in need. As we look at the eligibility criteria in the text that's released, we're seeing a 3-part test for eligibility for this second draw loans. Organizations must be under 300 employees. Organizations must have a drop in quarterly revenue this year compared to a previous year of at least 30%. And organizations must also qualify under an alternative size standard set by the SBA separately. I think that our community has some concerns about each of those three provisions. I think if we were writing this for nonprofits, we would probably tweak all of those. And I know that, independent sector, Wes, I know you've been talking to a lot of folks on the Hill about this. You and I, Wes, we haven't talked about this in at least an hour. So what are you hearing lately about, what the thinking is on the Hill about second draw eligibility?
Yeah, so the intent with the second round is to kind of target to smaller organizations. Obviously, the original one was 500 employees or less. This one is 300 employees or less, with a also requirement for a revenue decline of 30% or more. Kind of hit those most impacted by the economic shutdown, the economic turmoil going on. But also, if you're not a small business concern, then you have to meet this alternative size standard requirement in there. That is in the bipartisan package, which would basically limit you to a net worth of 15 million or less, or profit net income in the last 2 years of 5 million or less. And that really is not, might be helpful for some or small business concerns that have to meet those tests, but for nonprofits, that's problematic in many ways, given it just doesn't fit our profile as a nonprofit. What is your, needs to be defined more distinctly for nonprofits based on the 990, as well as the net profit, net income concept is not what nonprofits have. So it really is not applicable, and the idea would be to have that. I think the conversation taking place right now is to have that requirement removed and not apply to nonprofits, or not apply at all. I know that some industries might prefer that, but for nonprofits, I don't think it works. So that's kind of the conversation taking place, as I understand it, in these last few hours.
Thank you, Wes. And so we have a question from Adam about how employee counts will be calculated for the second round of PPP. I know that we spent a lot of time digesting what counts as an employee the first time around. How do you think that either the legislative text or SBA are going to be thinking about that 300 number?
Yeah, the original CARES Act had it applied to full-time, part-time, or other employees for the 500 employee count, and I think the language just kind of reverts back to that same definition. It's different for this piece; it only applies to full-time equivalent employees, but for the underlying qualification alone, it is full-time, part-time, or other employees.
And so we think that there's been talk about, do you have 300 employees currently, or did you have 300 employees when the CARES Act was passed? We think that this will be 300 current employees. Would that be your guess? Right.
Yes. Yeah.
Great. Thank you. And thank you for the question, Adam. So Wes, you also, you mentioned some other pieces. Before we move on to those, I do also want to highlight another content piece from this text, which is also from the nonprofit sector's perspective, a disappointment. We haven't seen anything that indicates that there will be changes to the above the line charitable deduction in this package. As our regular listeners, as we probably all know, there's currently a $300 above the line charitable deduction. There's bipartisan legislation in the House and Senate that would increase that to $4,000 per individual. We've seen Senate Republicans advance legislation moving that to $600 or $1,200 per couples. That's an area that independent sector continues to push on. I know many of you do as well. At this point, we haven't seen much indication that will move. And then the other key content piece that I would want to highlight is around federal share for reimbursing employers. This legislation, again, the last public text we've seen, does include an extension until April 19th of next year of that 50% federal share for nonprofits who pay their unemployment insurance through the reimbursing model. So that's those are pieces that are out there. On that one, we would like to see it move to 100. We have a question from, before we move on, I want to look at this question from Judy. Any insight as to the easier forgiveness process for current loans under $150,000? Yes, thank you, Judy, for that question. Yes, the text we do think includes easier forgiveness. We will certainly be unpacking those details about the specifics of it as soon as we see final text. And this is, I think, another good question from John McKenna about how soon we think SBA could kind of turn back on some of the spigots. We saw when these programs ran out of funding earlier in the year, they were able to turn the initial PPP program back on rather quickly. Do we think it'll be the same for second draw loans, Wes?
Yeah, hopefully it'll be a much quicker and easier process, given that when they passed it in CARES Act, the banks who traditionally did 7A SBA loans were kind of able to move more quickly than other banks who weren't in that process, and so that benefited, as existing relations between businesses and banks who already did SBA loans. I think they've kind of worked out some of the kinks, and so you have, I think, banks be able to turn back on that process to go back to where they were in the spring and the fall, or in the spring and the summer, to kind of get those loans up and out the door quicker than they were under the CARES Act. There's also, I should mention, in the bipartisan package, and hopefully it will remain in the final version, some set aside funds under PPP for smaller institutions, CDFI institutions and credit unions, and also a small set aside for smaller employers who have 10 employees or less. And so there's some of the funds that are set aside for more targeted relief, and hopefully nonprofits can take advantage of that if they use a CDFI or a credit union rather than a traditional bank. But my estimation is that most of the banks, or probably all the banks that were active in PPP loans this past spring and summer, will re-energize and get back into the business and do loans again. So hopefully it'll be a quicker and easier process to get the applications in and get the loans funded than it was after the CARES Act.
Great.
Wes, well, we also haven't seen on the bipartisan package anything about employee tax credits. Is this something that could be included last minute, or is this something that we should be looking forward as an item for next year, next Congress, as we still try to to deal with the recovery from the COVID-19 pandemic?
That's a good question on it. Is that the tax items that were in the CARES Act, employee retention tax credit, for example, and the payroll tax deferral, all expire at the end of this year. But there's also about 30 or so traditional tax extenders that we've been familiar with in the past that expire on an annual basis. It's also part of the conversation. The bipartisan bill that was put together by the bipartisan group in the House and Senate did not have any tax provisions in there. And so it did not have the employee retention tax credit, did not have, as Ben mentioned, from the Republican bill, the UCD, charitable deduction, a $600, $1,200 deduction limit for 2020. And there is conversations about what other tax items to be added to the package. We expect them to add the tax extenders package to that deal, assuming it gets done. Retention credit has been part of the conversation as well. But I haven't seen details about how that would be resolved. If you recall, the HEROES Act, the House passed back in early summer, it did have a large retention credit expansion, increase the dollar amount, the credit amount, and the wages that applied to. Republicans did have a version to expand the retention credit themselves, but at a lower dollar amount, lower threshold. So there's bipartisan support for it, and the idea, it should get traction. I just haven't heard or seen whether that's going to be part of the final deal, but it is part of the conversations taking place. So I would expect to see at the end of this conversation, the tax title or a tax section to this bill. Unclear exactly what all it's going to include beyond tax extenders and some of these other items we've talked about. I mean, the hope is that the retention credit is in there, The question is, what is the dollar amount or the value going to be? Because I know nonprofits can avail themselves of that and have before, and it would be something that would be helpful to the sector.
Thank you. Wes mentioned some other policy provisions that are important to the nonprofit sector and that are particularly relevant to the work of the Nonprofit Infrastructure Investment Advocacy Group, a working group that Independent Sector co-founded with Kaboom that is advocating for the role of nonprofits as civic infrastructure as Congress looks both at COVID relief and at future infrastructure legislation. Whether, when we started thinking about it, that was whether it was a push from the Trump administration or, now we're certainly looking towards the Build Back Better era. And there are a few pieces of the bipartisan bill that we haven't heard bad news on being withdrawn from further leadership-led negotiations that dovetail with that group's recent advocacy. So I do want to flag those as well. The legislation includes $10 billion to support childcare providers. It includes $10 billion for broadband access and assistance. And it includes assistance to the Postal Service by eliminating a previous repayment requirement for a $10 billion loan that was included in the CARES Act. So converting that loan to a grant, essentially. So $10 billion on each of those three priorities of the Nonprofit Infrastructure Investment Advocacy Group is one positive that we're seeing out of this bill. Now I want to turn to Anna. I know we are all closely watching, by the minute, what's coming out of Capitol Hill on these urgently needed negotiations. There are a lot of other issues on the nonprofit sector's plate right now that we're watching. I want to make sure to touch on those as well. So Anna.
Thank you, Ben. Yeah, I have 3 updates on things that I think that we're gonna continue following into next year. The first one is regarding the executive order. Last week, the executive order banning implicit bias training, better known as executive order number 13950, came under some sort of a scrutiny by a federal judge in a hearing in a federal lawsuit filed by 6 LGBT groups. The judge expressed her view that the restrictions in the executive order could be applied in an arbitrary and discriminatory ways and discourage speech by federal contractors and vendors, even when they are not working on a government contract. The judge didn't say when she could rule on the plaintiff's request for a preliminary injunction blocking the executive order, but have given these groups until next week to file, to submit filing regarding the injunction. I think this is a positive step that a federal judge is looking into this, because as you may recall, the executive order and the Office of Management Budget memo that was in September prohibit diversity trainings for federal agencies or federal contractors that teach that the United States or any race or ethnicity, and I quote, is inherently racist or evil. So I think that we will continue to look to see what the federal judge says, given that this also prohibit grants from the federal government to be applied to or nonprofit organizations that actually provide non-biased trainings. But I have a question, Wes. If this executive order is not overruled by this federal judge, is this something that could potentially be on the president-elect's to-do list for when he starts the administration?
Yes, executive orders are basically written by the president, and so unlike their regulations or statutes. They don't go through a similar process of review and approval, et cetera. So, the incoming administration can write their own executive order in this space and direct agencies to change or to modify how they are applying this in this area.
Thank you. So we will continue to watch, but again, it's a step in the right direction. So another update that I have are the top line numbers on Giving Tuesday. This year was the 9th annual Giving Tuesday, and supporters broke giving records during the Global Day of Generosity. Donors gave an estimated of 808 million online and 2.47 billion overall. And also, according to the Giving Tuesday Data Commons, an estimated of 34.8 million people participated in Giving Tuesday, which is a 29% increase over 2019. Also, as you may recall, earlier this year in May, there was the Giving Tuesday Now, which generated $503 million online, and this was focused as a one-day event pandemic response. But overall, this year broke expectations on giving. Given that last year Giving Tuesday number was 1.97 billion, I think that a lot of the giving was definitely targeted towards pandemic relief, and because it's been such an unprecedented year. But hopefully next year we can get enacted a UCD if actually we don't see it included in this package, and I think that will continue to incentivize giving. But on the same topic of incentivizing giving, I'm sure that many of you have heard that there is a proposal developed by philanthropist John Arnold and Boston College law professor Ray Madoff to accelerate charitable giving. This proposal has yet not resulted in a bill before Congress, but from what we know, the proposal would allow donors to claim an immediate charitable deduction for contributions to their donor advised funds accounts, only if the funds are distributed to charities within 15 years. This proposal would also prohibit private foundations from using grants to donor advised funds to satisfy the federal requirement to pay out 5% of their assets each year. And it would provide a tax incentive for foundations to increase their annual payout or spend down all of their assets within 25 years. This is another item that we are going to continue watching into next Congress. And into the next administration, just to see what is the appetite to amend laws that would regulate or whatnot donor advised funds and foundations, right? So, well, Ben, those are the updates I have.
Thank you, Anna. Yeah, a lot of big topics potentially on the plate for the sector and for Congress next year. So I want to pause again to see if folks have questions, ideally through the Q&A box, about the updates you've heard from Anna on the executive order or on some of these philanthropy reform proposals. Also happy to take further questions about the COVID relief negotiations happening in Congress right now. While we give folks 1 minute, Wes, you also mentioned this, minor chore of a $1.4 trillion omnibus spending bill that Congress is also trying to pass right now. It's not getting many headlines. Are there things that you think are holding that legislation up, or is that legislation ready to go and just waiting to serve as a vehicle for any COVID deal?
Well, my understanding was it was pretty much ready to go. There was early talk of only getting 10 of the 12 bills across the finish line, and a couple of them, Homeland Security, I think military construction, to be in a CR next year. I think they've worked out the details on those and plan to have all 12 bills in the omnibus appropriations package. But usually in this town, until it's not final, until it's all final, and so the appropriators have done most of their work, if not all of their work, and waiting for the COVID negotiations to complete in order to put the entire package on the House and Senate floor. But as long as it hasn't been technically it's still, technically potentially open for change until it's been filed. But I think that appropriators are pretty much finished their work, and for the most part, I think that my understanding is that the numbers of the top line numbers haven't been a huge problem. More of the individual items and requests for policy riders and different different individual programs. I think generally speaking, we've seen the last couple of years the appropriations process has not been in divided government's been tough to get a final deal, but they do it more in a CR or a omnibus appropriation package like this. They did last year, but overall, I think funding has gone traditionally gone up. Not by huge amounts, but it's gone up in line with where the House and Senate appropriators have been. So I'd expect that to be filed and done as well. It's really the COVID pieces that, in my understanding, are holding things up to get a final agreement filed and voted on.
Great, thank you. I'll give folks one last chance for questions. I know that those of us who are federal budget nerds are really looking forward to next year. It'll be a whole new process from what we've gotten used to with the expiration of the Budget Control Act, sequestration caps. So new House Approps Chair Rosa DeLauro and and all of her new colleagues she's joining at that table. They've got their work cut out for them next year.
That's one thing to talk about, and is maybe think about next year. Obviously, it all kind of rides on the outcome of the two races in Georgia, but if we have a more of a status quo result in Georgia, meaning the Republicans win both seats, and they're at 52, 48, still tighter than it is now, but still much the same. It might be difficult to get appropriations bills done quickly. But if the Democrats win both seats in the 50-50 Senate, with the vice president breaking the tie, the Democrats effectively control all three processes of government, the House, Senate, and the White House. It'll be much easier, obviously not easy because they'll have different factions within the Democrat Party, the progressives, the moderates, etc. But it'll be easier for them to process their appropriations bills and get them done on a more timely fashion, I would expect, into next year. So that'll be something to watch. That will influence the process quite heavily for next year's outcome. I think the hope is to get this bill done and then have that clean slate for next year.
Thank you, Wes. I'm just looking at one question. Wes, do you care to speculate about Speaker Pelosi's future? Do you think she's going to get the votes to become Speaker again for her final 2 years? She's certainly projecting plenty of confidence about it.
Yeah, that's a good question. I think she does. She's pretty strong. I think she's been successful in getting the votes put together in past years. Obviously, given the outcome of this election, the House numbers are much tighter. Democrats did not do very well as they expected, and the Republicans gained, I think, 8 to 10 seats. We'll see seats outstanding, but they made some decent progress in the House Republican side. So the margin is, I think, 8 to 10 seats. Depending on how the final numbers shake out. And so that's a close margin. And she got, I think, probably go back and see how many people voted against her last time and go look at who are those people that are all coming back. So I think at the end of the day, she does, get the votes to become Speaker next year. I think she has the support of other leadership members. And she's also said it's going to be her last year or last term as Speaker. So that might play into her favor.
Yeah. And Michael, the only thing I would add to that is, from what I've read, what I think is really keeping the Pelosi folks and her team up at night is whether any of her votes are going to be, stuck in quarantine, or, unable to come vote with a narrow margin. It's certainly going to make, not just this vote, but I think, every vote in the 117th Congress, as long as we're in a pandemic, is going to be an additional variable for them to consider. Probably in the grand scheme of things, the least important impact of the pandemic, but one that certainly impacts their jobs day to day.
Yeah, no questions. Small groups or caucuses in the House got a big influence, right? Whether it's the progressive caucus or some of the more moderate Democrats being concerned about what kind of legislation goes to the House floor. Obviously, the 2020 elections are just around the corner, right? We're always in some election cycle, and so 2022 is going to be on people's minds as well. And there's going to be a interest in making sure that some of those members who are in tough seats and in tough districts, aren't being forced to take too many tough votes, jeopardize their future. And so that's gonna be on people's minds next year as well. And with the tight, numbers in both the House and the Senate, it's gonna be interesting how they try to navigate that. More, my view, a more of a moderate, center type approach is probably more likely to getting things done.
Yeah. And so as we close this December monthly policy update, I will note that there's one question in the chat about funding for particular agencies or programs in the omnibus. This question specifically about the Corporation for National and Community Service, AmeriCorps. And those details haven't been released yet, but it's a good chance for me to remind folks to please stay tuned as legislation comes out. The independent sector team, the Washington Council team, and our colleagues, at allied organizations will be taking a very close look at, hopefully not too much more than 1,000 pages of legislation and digesting it for you. So that you have the tools you need to advocate and to stay informed on these issues. So while we are signing off the monthly policy update for the year, we are certainly still, nose to the grindstone, advocating for a number of the concerns we've flagged about this COVID relief bill, and we'll be sharing what we know with all of you as soon as we can. With that, I want to again thank you for joining us on all of our policy education events this year. It's been quite a wild one. One of the more gratifying pieces of it has been having you all to be engaged with and to partner with, both through this and through all of the other advocacy we've all done together. So thank you, Anna. Thank you, Wes. Thank you all. Have a great rest of the year. I'm sure we'll be talking to you. Have a good afternoon.
Thanks all.